After the heavy correction we saw through June, the Nigerian capital market is beginning to show signs of recovery in July. But the latest week was not a sign or was not a straight line rally. The NGX or share index closed marginally up for the week, while the market capitalization closed around 157 trillion naira mark. So we have a market slightly positive with about 44 companies as advancers and about 35 companies declining week on week. But the number tells us something important. This market, as it currently is, it's not a market where everything is rising together. So it's a selective market. So in today's episode, the idea is to go through what happened last week, the stocks that advanced, the names that came under pressure. We'll also talk about the FGN bond auction that is coming up, the Dangote Refinery, the stories that matter about that, the IPO that is also imminent. We'll also talk about the new executive order signed by President Tinubu on the new digital assets. We'll talk about how that is going to affect crypto, fintech, and the broader capital market. So, the big question for me and for everyone listening is after the June correction and the July rebound, where should investors be paying attention to, and what should you be doing right now? So the first thing I like to go over is just to talk about what transpired in the markets last week. So the headline numbers show slightly upward in terms of how the market closed for the week, but underneath the surface there's still some meaningful activity. The market did not collapse, rather it moved into a more selective phase, and it moves into a more selective phase, which means investors are not just buying everything, investors are selecting specific names. So that matters because a major rally and then a correction, the next phase of the market is usually not about buying everything. And so it's about identifying where fresh demand is, and you are then take action on where those fresh demand, and just showing up for those fresh demand. So the key point from the latest numbers is that had about 44 stocks advancing, while we had about 35 companies or 35 stocks that declined. So that means that there was still a positive breath, but not a kind of the broad aggressive buying that lifts every sector at once. So we noticed that happened the week before. Investors are becoming more careful. That's my reading of it. Investors are becoming more careful. They are rotating into areas where they see liquidity, areas where they see earnings potential, areas where they are observing strong catalysts, while also taking profit or staying cautious on some of the weaker names. So this is why I would not describe the current market as overheated, and maybe that's why people are trying to cool down. So that's not the right word for it now. So June gave us that correction, but July is giving us some recovery attempt. So that's the way to look at what is currently happening in July. So the real question is the NGX going up or down? So the better question, which parts of the market are attracting serious demand and which parts of the market are still under some pressure. So looking at the movers and the laggards for the week, so the standard names of First Holdco, which gained significantly, about 39% to close the week around about 95 or 96 naira. So this is very large move for 1 week trade for First Holdco, and someone is saying it's now beginning to reshape or surface itself as the main competitors to the likes of the likes of GT Co and Zenith Bank. So it tells us that the financial services remain one of the strongest areas for of market attention during the week. There are also some other names that gain, like Thomas Watt, Nigeria, gained about 27%. Fidelity was also up by I think about 15% as well for the week. So the activity data that we see confirm that the market is still in an moving in an upward trajectory, but then it is not spread across all stocks because investors are selecting names that they see that they have probably earning potentials, or that they have been monitoring for a while, or that they see that the valuations are now cheaper. So the financial services industry dominated trading for the week, and I think it traded values worth in excess of I think about 100 billion naira in terms of the value that was traded for the week for the financial services. So when we talk about the market or market leadership, we're not looking at price gainers alone. We're also talking about liquidity. So financial services attracted both price movements and in terms of trading volumes, they were also there because they I think they had about 96,000 deals were traded on the financial services sector. So that's huge for the sector. So they continue to dominate the activities on the NGX. So, but the market had other clear losers. Talk about the likes of Boa Cement, one of the biggest decliner that we saw, and one of the reasons why the market didn't have that substantial leap was because of the likes of Boa Cement that declined close to about 19%. We had other companies like Resta Express also. Resta Express was down, I think about 18% thereabout for the week. So the contrast is important. If you look at First Holdco gaining massively for the week, while Boa Cement came under pressure. So this tells us that this rebound is not a broad euphoria. It's a sector rotation. So investors are rewarding some names while also punishing some others, or just staying out of some other names. That's the way it is. So for uh, retail investors, I would say the lesson is simple. Do not buy just because the market is rebounding. Okay, a rebound can still be very selective. So I would ask, is this company moving because earnings are improving? Is there a sector catalyst? Is liquidity supporting this move? Okay, is the valuation still reasonable after the rally? Or am I simply chasing what has already moved? So these are the questions that I'll be asking if I'm going to be selecting or buying any of these names. Okay. So there's a bond auction as well coming up on Monday. The the DMO released the Q3 calendar. So there are bonds that are going to be issued 20 35, the 2037, the 2038. So the 2037 probably going to be issued the last time for this month, and for the rest of the quarter, we'll have only 2035 bond and the 2038 bond. So with the circular that was released, the the DMO is looking to raise about 1.2 trillion across those three maturities: the 2022.60 FGM bond, 2035 bonds, the 15.45 2038 bond, and the 16.2499 2035 bond. So the expectation is that these bonds will close around 18% to about 18.35%, somehow around the levels where it closed at the last auction. Because after the last auction, we've seen bonds traded close to 19%, but we've since seen some retracement because of some fresh demand coming from foreign investors as well. So that's also brought in some calm and normalcy into that market. So we are seeing net demand in the NGX bond market as we speak. So the government is trying to raise about 1.2 trillion across the three maturities. So you might expect this to impact what happens in the stock market, because of, we're talking about liquidity and the attractiveness of those instruments, because of the rates, or the rates that the yield that these bonds currently offer to investors. So another, for retail investors as well, looking, if you're looking at the fixed income market, another interesting or opportunity is the FGN retail, the FGN savings bond. I think that's actually closed. I think that has closed. So the bond was, I think the auction closed, I think maybe, I think on 15th of July. Yeah, that's when it closed. But the FGN savings bond offers about 2 year savings bond with the payment, the interest payment on that, it's about 14.7%. And a 3 year bond is about 15.7%. So the interest is paid quarterly, and the minimum subscription for that is about 5,000 naira. So which makes it accessible to small investors who might be looking to either have some fixed income as part of their overall portfolio. So the advice usually is you should diversify your investment, diversify your portfolio, so that you don't have only one type of asset class in your portfolio. So the question I like to ask is, if you can earn about 15% on some of these FGN saving bonds for a government-backed instrument, so how much risk should you be taking in equities, right? How much risk? Because it's going to give you about 15.7% for a 3 year bond. It's going to mature July of 2029. So how much risk should you actually be taking on equities? Okay, now this, you can consider this as some form of risk-free investment. So for someone who needs capital preservation and predictable income, so bonds and saving bonds would always remain very relevant. But for someone with a longer time horizon who wants capital growth, obviously equities can still offer, significant alpha upside. So which a lot of investors, which is why a lot of investors play in the equities space. Okay, so the answer is not whether it is stock versus bond. The better answer is portfolio balancing, all right? And that you should be able to answer that question. Fixed income gives stability and income, right? If you purchase fixed income instruments, it gives you that stability and income. And equity gives you that growth potential. So the right mix would depend on your risk tolerance, your cash need, your age, and investment horizon. That's what would determine, your portfolio selection. Okay, the how you select the assets in your portfolio. All right. Another thing I wanted to talk about is the Dangote Refinery. So the Reuters is reporting that Dangote petroleum refinery raised about $2.5 billion through private placements ahead of the planned IPO, which I think is imminent. They're all within August and September. So the refinery is about 650,000 barrel per day facility. We understand that that's also now being ramped up. That has been scaled to reach about 1 million, to be able to process 1 million barrels per day. And so the capital raise is expected to be used to strengthen the financing structure for the company. Right. So there are a few details that I'm getting that I understand from the private placement. So earlier reporting is showing that the refinery was offering about 3 billion ordinary shares at about 35 cents per share. So if you do the maths, convert that to using maybe an exchange rate of 1,400 or thereabout. So you can get an idea of where the stock might be issued during the IPO process. So they're looking at minimum subscription of 1 million shares or about $350,000. That's during the private placement. Okay. And those shares, to my understanding, are subject to a 1 year lockup period. So for the guys who purchased during the private placement, this is subject to about 365-day lockup period. Okay. And that's usually to ensure that they don't come in immediately after the placement to begin to sell. Okay. So that tells us that this is not a small retail offer. It's something structured for large investors, okay, willing to commit significant funds and then be able to wait for a period of time. So that's really the idea for investors who participated in the private placement. Okay. So what does this offer? I mean, why does this offer matter for the Nigerian capital market? I know we've been discussing all of that here. So, first, for the IPO, if the IPO eventually comes, which I expect, it could become one of the most important listings that we'll see in the history of the NGX. A large refinery listing would definitely deepen the market and attract institutional investors and possibly improve the foreign investor attention into the Nigerian market. We also understand that the refinery is also going to be dual listed, so we can expect to have comparative pricing on these assets as well. So it could also affect the broader energy sector. The Dangote Refinery is not just another company, all right? It sits at the center of fuel supply, import substitution, refining capacity, logistics, FX pressure, and Nigeria's industrial strategy. So that's how central the Dangote refinery is. And one other thing is that it could also create a major test for valuation discipline. So a great company is not automatically a great price, I mean, a great stock at any price. So the fact that a company is great doesn't mean that the price will be, must be sold at any price. Okay. So investors will need to see the prospectus. Okay. You need to read the prospectus, look at the numbers, understand the debt profile, understand the earnings outlook, the offer price, use of proceeds, and the dividend policy. Now, we understand that it's going to provide opportunity for investors to earn in dollars. So this is going to make sense for investors who are looking to earn in dollars as well. So there's an important caution that investors need to take when assessing IPOs. Okay, so I would not say um, you need to purchase the stock at any price. You need to do your due diligence, understand the numbers, and be able to take an informed decision when the IPO is finally open to the general public. Okay. So there's also the company. I understand there are plans for the Dangote cement to also open up about 700,000 barrel per day refinery in Kenya, and that's through some internal cash flows as well. So we are not sure yet whether this fund that is being raised is also going to be used to finance that refinery in Kenya. But so Dangote is not only building in Nigeria, as you can see, it's also trying to build Pan-African energy infrastructure. And so that's one thing that's one takeaway from the Dangote refinery. So the Dangote Refinery IPO, as I mentioned, could be a major catalyst, right? But investors should, I would say, not rush blindly, right? You do your due diligence, ask questions before you jump in. But one thing that is significant is if priced appropriately, could offer opportunities for investors to really be a part of a massive company that has immense potential to continue to scale. The company is currently about 650 thousand barrel per day capacity. If it scales to 1 million barrel per day processing capacity, or even beyond that, then you can only imagine the times of bottom line that the company would generate and how that is also going to be impactful to investors. Okay. All right. One other thing I like to talk about is the executive order that was recently issued by the federal government. President Tinubu signed the presidential executive order on virtual asset coordination 2026. I understand that the purpose of this is to harmonize regulation on virtual assets, improve cooperation among financial and capital agencies, protect citizens from fraud, and support innovation or supporting responsible innovation. What does this mean in plain English? The government is saying that virtual assets are now too important, okay, and too risky to be handled in a fragmented manner. So they're trying to coordinate the agencies that would regulate virtual assets. That's the simple English or plain understanding of what the executive order is. So before now, one of the big problems was regulatory confusion. Is a token a security? Is it a payment asset, or is it just a commodity? Right. So because if it's a for a security, if it's a payment asset, if it is a commodity, then there is some confusion, or even if it's some form of exchange, there's some confusion over who needs to regulate it, okay? Who needs to monitor, or who needs to take custody or be responsible for any of this. So now what the executive order is trying to do is that the executive order now establishes a virtual assets council. So you establish a virtual asset council that is going to be chaired by the CBN with the Nigerian Revenue Services, the SEC as the vice chair. It's also going to include the NFIU, the Office of the National Security Advisor. All this will be members of that council. Will have their secretariat within the Central Bank of Nigeria. Okay, so that's the makeup of the council. So what does this mean to you? For what does this mean? So what it means is that if a product looks like a security, for example, a tokenized investment product, or maybe something promising returns like capital market instruments, the SEC will likely be involved in that. So it's the SEC that is going to regulate that, okay? But if it relates to maybe payment, settlement, or custody, or other non-security virtual assets, then that will be the function, or that will come under the purview of the CBN. So the goal is to, I think, create a brand new regulation, or brand new regulator rather, but to coordinate. It's not necessarily to set up maybe a new regulatory agencies rather. I think the goal is just to coordinate the existing agencies so there's some form of synergy around the management of virtual assets. So I think this is important as many Nigerians have lost money right recently to maybe some of these unregistered digital platforms promising some unrealistic returns. So the executive order is it's meant to partly is about closing any loopholes. That's my reading. It's going to close loopholes that previously allowed some of these companies to move investors funds, or just to be able to close any gap within that space. Okay, so I think this should be some positive news, but it's not saying that you should now begin to buy or cryptos, or you should now sell cryptos. But so what it means is that the rush for some of these digital assets, or if you purchase these digital assets, or if you have any of the digital assets, you can know the regulatory agency to, make complaints to in case you have any questions, or the regulatory agencies will now have the opportunity to assess any of these new platforms coming up and then be able to properly regulate them as they come up. So that's essentially what the executive order is for in plain language. All right. So I think finally we're looking at the global market. Oil prices are beginning to go up again because of the resurgence of the crisis in the Middle East. So you know that oil prices matter because the Nigeria reserves, the FX supply, fiscal position, and even investor confidence are all intricately linked to the energy, whatever crude oil prices, whatever is trading, all of this linked to the crude oil prices. So we have seen fuel pricing and crude oil supply also beginning to go up, and we also see that impacting inflation. Though inflation came up, printed this for the month of June at 15.91. That came down slightly. The previous month was 15.93. Analysts are expecting that we might continue to see inflation decline as we move forward. But with crude oil prices going up, with energy prices going up, that might become a challenge if crude oil prices continue to rise. Some other things that you should be watching will be U.S. Interest rates, and so they also matter because when dollar yields are attractive, obviously global investors will have less incentive to be able to take frontier market risks. But if global rates expectation begin to soften and Nigeria keeps improving, FX liquidity reserves remain robust, then we also have some stability in our policy. So foreign investors obviously would begin to look at the market. We already talked about um, the FTSE Russell index, placing Nigeria on watch list. Understand that the leadership of the NGX is meeting with the FTSE Russell index about their intention to reclassify Nigeria back into the frontier market status come September. I also reported or discussed with you the last episode about the S&P Dow Jones index also putting Nigeria on watch list with potential reclassification by um, the first quarter of 2027. So you're seeing a lot of activities, you're seeing a lot of foreign investors or potential inflows coming into the Nigerian market. But all of this will depend on our macros. All of this will depend on what energy prices are doing, the policies, the execution on this T+1 settlement and all that we've been talking about. So these are things to look out for. So my base case for the Nigerian capital market is that it has enormous opportunities, but it's not um, it's not something that would say just buy any stock that the prices are going up. After that June correction and the July rebound that we are seeing, so the next phase will likely reward selectivity, and that's why if you follow us on the edge, we really talk about some of these names, and so it's going to be up to you to be able to sift through all of the names and then select the stocks that match your investment plan. So, for investors with fresh capital, I would avoid, or my advice would be you avoid rushing all your funds at once because I get that question all the time. And my response usually is stagger your entry. Okay. You can build a watch list, compare valuations, understand the different catalysts. Okay. Look at the earnings, keep some liquidity, and don't ignore fixed income. I already told you it helps you to ensure that you have some stability in your portfolio and also provides you with some fixed income as the name implies. Okay. Especially when they are backed by the federal government. Okay. So this it's one class of assets that you should have in your portfolio. Okay. So the big takeaway for July so far is that July's rebound is encouraging. Okay. It's encouraging, but investors would need discipline. Investors will need discipline. The market is offering opportunities, but those opportunities not um, are not evenly distributed. Okay, they're not evenly distributed across different asset classes. So The winners will likely be investors who are able to balance equities, with fixed income. You focus on quality names, avoid hypes. So not necessarily all companies that are, currently advancing that you should, queue up to purchase. There are also some names that are probably not hyped as other stocks now, but are still relatively cheap. The fundamentals are strong that you can also invest in. So that's for me is the way to look at selecting stocks in at least July and as we progress in the second half. Okay, that is it for me today. If you've enjoyed this discussion, please like this video. And if you are new to this channel, please subscribe to the channel, hit the notification bell, and share this video with your communities so that you can always be notified, or they can also always join this conversation. So let me know in the comment section, are you more interested in NGX stocks right now? Or are you going to be pairing them with some fixed income investments? All right, take care, everyone, and I'll see you in the next episode. Bye.